Welcome to Real Estate Focus. I'm Kelvin Law. Our topic is residential lending. My guest is Ambrose Ling from Guarantee Rate Mortgage. Ambrose has been in the residential lending business for about 20 years. And he just got moved over to Guarantee Rate as the vice president. Pretty fancy title, huh? Yes. So he's here to share with us about his expertise of the subject. So thank you for being here.
Thank you for having me.
I'm glad you made it.
Looking forward to our conversation. Hopefully educate some people.
Yes, we will. And thank you so much for coming all the way from Rhode Island.
It's not that far, right?
Yeah, so yeah. So at least you're here, so yes. Safely. Yeah, so that's great. So before we jump in the residential lending sector, if you will, I'll just let you talk about what's going on with the market right now, the real estate market right now. So as everyone know that this is a seller's market with the lack of inventory and also with the high volume of buyers out there, coupled with low interest rates of all time, pretty much, right?
Perfect storm.
Yeah, perfect storm to have, right? And is a roller coaster ride for a lot of buyers as well.
Correct.
Multiple bidding everywhere, and prices like rocketed above asking price like crazy, between 50 to 100,000 or more.
That's
right?
normal right now.
Yeah,
yes.
That's right. So basically, buyers who are looking to own a property right now, they have to step up to the plate. So, for example, a lot of buyers waive home inspections, finance contingencies, and appraisal contingency as well. And this doesn't apply to all the buyers, right? So especially first-time home buyers, unless like experienced buyers. Mm-hmm. So therefore, it's very competitive out there. So make sure you get educated. You work with the right real estate professionals, contractors, vendors, mortgage brokers, to guide you through the whole process from A to Z, as well as to protect your best interests as well. So that's important, other than trying to get your foot into the door. So the first step is to get yourself either pre-approval or seriously a commitment letter, right? Just cool. Like buying a property with cash, and we're going to talk about it later. So with that being said, what is portfolio lending? Because I know that there's a difference between portfolio lending and also a conventional loan as well. So yeah,
correct.
Please.
All right, great question, man. Portfolio loans are pretty basically loans that banks keep in-house. Whether it's a non-conventional loans that they would just basically keep to earn your business. And most of those times are from banks or credit unions that offer those portfolio loans.
So for the portfolio loans, are there any prepayment penalties?
That depends on the lenders. Generally, they do not have prepayment penalties. Most loans today don't have prepayment penalties. And if they do, they will that will be notified on your documents. But it's a great question. You should always ask.
Yeah, it is important when it comes to portfolio loan, because I've heard that those loans might contain prepayment penalty for for the first 3 years or something like that.
Yep.
So each lender varies.
It varies, and you can also buy those down too. You can buy it down to 2 years, 1 year, or even waive it, but you may pay a penalty in the interest rate
Beforehand. Gotcha. So when a buyer found a property, and basically before that, let's step back a little bit. So before the buyers go out and look at properties, and the first step is to get a pre-approval letter. So they contact you. What is the process of getting a pre-approval letter? What is the typical process?
Well, I always say to my clients is you should always have a game plan, how much you want to spend. So the process is very simple. It probably takes about 5 minutes. What I do is I send them a link. They fill out their personal information, complete that, and then I go over that information with the client. Mm-hmm. And generally, again, it takes about 5 or 10 minutes to complete that. And then we go over it, and so they know what type of payment they'll be looking at, and get some information regarding that property.
Is it a good time to refinance now because due to all-time low interest rates?
Absolutely. Well, for refinancing, it's basically there always has to have a tangible net benefit. In our business, it's called TMB. So anytime, just because you're reducing a percentage in your rates, or you may have a small balance, or if you're not taking any cash out of the property, as long as there's a benefit, there's always good time to refinance. And a lot of times you can save years off your mortgage, so you don't always have to go back to a 30-year loan. You can go down to a 15, a 20, or somewhere in between.
So let's say if a typical homeowner who is planning to refinance from a 30-year fixed rate, but they have paid their mortgage for 5 years into their loan already, and they want to lower their interest rate with the same term of the loan, if you will, would they have to start over again, like 30 years, or?
Nope, you have the option. So you, as a consumer, you have the option. So in that scenario, so they're already 5 year in, you can start at 25. You can even start at 22 years. It really doesn't matter as far as the term, as long as you're comfortable with the payment. And a lot of times, depending on your interest rate, the savings could be where you start off. It could be a lower term. And I did that with my own loan. So, I was 3 years into my mortgage, and I dropped it down to 20 years with roughly about the same payment. So I cut 7 years off my own personal mortgage because of the lower interest rate. So you don't necessarily have to start at 30 years, so to speak. It's really whatever you feel comfortable paying. But obviously, if you want to save as much money, 30 years is the best option. You can always pay extra. And there's no prepayment penalties in our loans.
That's interesting to know, because I thought you have to reset the number of years again. So
never.
yeah, okay,
No.
Okay, good to know. So why credit scores are so important for all the lending process?
Well, credit score is very important because it's a guide to how you pay your bills. And the way I explain it to all my clients is, if you pay everything in cash, there's no proof that you've ever paid things on time. So if I were to lend you $1,000 and I never seen the fact that you ever paid anything on time in your life, chances are I'm probably not going to lend you that much. I'm going to lend you something smaller. And that's the same thing with credit works, is if you had, just because you have a limit of $2,000, if you pay everything on time, then I'm willing to increase my limit. And same thing, and when we're talking about mortgages, we're talking about hundreds of thousands of dollars. So credit is very important. So you definitely should always pay your bills on time, and work on it if with a financial mortgage loan officer like myself to assist you and try to rebuild your credit.
Yeah, so if people pay their bills on time or whatever, make payments on time, that shows like credential, right? And then trust, and then the personality
Of course,
as well.
yes,
Yeah, so
absolutely.
Those 3 factors, or
Right.
other
And then
more
also-
factors as well. Yeah. So
Also, people that pay their bills on time have great credit also get the best rates. And rates is based on your credit profile.
right, I agree. So nowadays there are different loan programs out there. The most popular one that people, especially first-time home buyers, are getting is conventional loan. So what is a conventional loan?
Okay, conventional loans are very simple. It's just conventional loans are loans that follow Fannie and Freddie guidelines, which is basically you can go for a first-time home buyer, you can put as little as 3% down, and it sounds exactly what it says. It's conventionally, your pay stub, W-2, tax return, verification loan. So it's not a non-traditional or non-unconventional loan where we have to go look at bank statements, no income documentation type of loan. So therefore you get generally the prime rate, the best rate available, depending on your credit.
That's good to know. So with the pandemic that we went through last year and still going through right now, so a lot of people are unemployed. So when they looking to buy a house, if they have a gap of employment in between, what should you do? And will they be able to qualify for a pre-approval?
That's a tricky question because it really depends. Because of the pandemic, there are a lot of different circumstances. Obviously, if you work in the restaurant industry, that affected your pay. But really, now we're about 6 months out. It's what's been going on now. Are you still with the same employer? Did you leave the industry and do something else? And if that is that income consistent? Are you 40 hours a week pretty much for the last 6 months? It's really depends on your profile as basically your employment profile.
Interesting.
Yeah.
So we are talking with Ambrose Ling, Vice President from Guarantee Rate Mortgage. So my next question is, and basically a lot of people can't differentiate between what is a pre-approval and what is a pre-qualification. So can you differentiate that?
Very simple. Pre-qual is just basically you, Calvin, telling me I work at this particular place, this is how much I make, and we pull your credit, and we're gonna go with that. Pre-approval is a little more involved, where we actually verify your income. You told me that you work and make this amount of money. We would need your pay stub and W-2s to verify that, and also obviously your assets as well. So it's a little bit more. It's a better letter. It just basically, instead of taking your word for it, we actually verified it, and that's the big difference between pre-qual and pre-approval.
So it's a little bit more detail for the pre-approval.
Of course, yes.
Yep. Okay, no doubt. So I've seen a lot of people in the rural areas, they go for like FHA loan. What is FHA loan?
Federal Housing Administration. FHA is very popular for first-time home buyers, and also for multifamily purchases, because you can buy a 4-family home with as low as 3.5% down. For a conventional loan, you would need anywhere between probably about 25% down for a multifamily home. So FHA is very popular when it comes to first-time home buyer or people that have okay credit but have money in the bank and whatever the situation is. But FHA is very popular in regards to that.
And there are certain restrictions for the FHA. The FHA as well. So like the condition of the property, right? That plays a factor, like no peeling paint, no loose like handrails, and then make sure the property is in decent condition to good condition as well, right?
FHA is basically going to be looking at any homes that's built before '78 because of the lead paint rules, and also their main factor is basically the overall safety of the property. So the peeling paint is because of the lead paint, and also handrails for steps. But anything else that's wrong with the home, but it's always major safety hazards. And those, depending on how much it is, a lot of times lenders like myself and other lenders could put that money in escrow, which is basically put aside to be fixed after you bought the home.
Oh, so basically there's a rehab amount in the escrow,
of course,
for the investors or the buyers to fix the house.
Yes.
Okay.
That's a different type of loan, but that's the 203K loan, where you can actually take money from renovation for that new house.
Interesting. And that's 203K loan.
Correct.
Okay. So the down payment is very similar, 25%.
Very similar, so 3.5%.
Oh, 3.5%?
Yeah, that's why it's FHA.
Wow.
Even
okay.
on a 203K loan.
Interesting.
So you can put 35. So they got two different type of FHA loans. The 203 is one streamlined, which is basically 35,000 or below, or one that's over.
Interesting. Yeah. And then basically, do they have to refinance with a 203K loan after they fix up the house?
Anything money that's left over goes toward the balance of the loan, and you do not have to refinance. You just keep that money will be paid to your builder and contractor, and for the repairs that's going to be done on the home.
So after the repair is completed, then basically they don't have to refinance. They can just keep going.
Yeah, they get the same low rate.
Yeah,
FHA has one of the lowest rates, so you keep the same rate and you have the same payment as for until you remove PMI.
So similar with FHA and 203K.
Yes.
Similar. Okay.
Very similar.
Okay, gotcha. So, what is PMI?
Private mortgage insurance. It's basically insurance that lender require for a buyer to pay or borrower to pay because of the risk involved with that loan. And generally, it's for most times it's 20% or below if you put down on the home or refinance. And all FHA loan has PMI. So if your credit is not that great, you might have to get an FHA loan. You will have PMI until you built up that credit, and then you can remove that.
Or refinance.
Refinance.
Okay.
Correct.
Yeah, gotcha. And what is a commitment letter?
Commitment letter is just a letter for from a lender like myself to provide the consumer saying that this person has already verified his income, his or her income, credit, and assets to purchase or refinance that home.
Mm-hmm. Okay, and a lot of people that I've seen a few instances where veterans qualify for VA loan, and so how does the process work?
VA loans are probably the best loan out on the market. The only difference is, most important thing is you have to serve in the military. Unfortunately, if you didn't serve, you do not get that VA loan. But the process is just the same, just like you buying a home. But the best part is VA loans, they do up 100%. So you technically can buy a house without even putting a penny into the home.
Interesting. I mean, not even they have to pay for the closing costs?
Closing costs can be rolled into the loan, so you could have a seller's concession to pay for it. And also on a VA loan, any seller concessions that's left over, you can use that to pay your debt in a purchase as well. So
good deal.
Anybody, not just me, anybody that offers VA loans.
I see. Interesting. Yeah. So and
that's why it's
interest
one
rates,
of the best. Yeah, and it's one of the VA has probably one of the best interest rates because naturally they deserve it. They serve in the military, so I feel like they should get the best rate.
I agree.
And the government agrees.
I agree. Yeah. So Ambrose, thank you so much for being here and sharing with us, and glad to have you come back. So,
all right, thank you for having me. It was a great time.
Terrific. Glad to hear. So I want to thank you so much for listening and watching. If you're a first-time home buyer or even a seasoned home buyer, it is important to get yourself pre-approved first, and then your estimated down payment, monthly payment, and closing costs. Also the market rate as well, and that will prepare you to look for different types of properties that you qualify for, especially in this crazy and insane market, if you will. So yeah, always prepare yourself if you're serious about buying home, so you can compete with other buyers in this hot market. So I hope you find the information helpful. Thank you so much for watching. I hope to see you next time. Take care.